Wait, just pause for a second and think about this. 10 green months in a row for silver. 7 straight record highs for gold. Let that sink in. This has never happened before in modern market history. Not during the inflation shock of the 1970s, not after the 2008 financial crisis, not even during the 2020 global panic. And yet right now, we are watching something that could redefine the entire precious metals market. If you care about protecting your wealth, this is not a normal moment. Before we go deeper, if you value clear, calm, financial breakdowns without hype, make sure you like this video and subscribe to Safe Haven Wealth. It really helps the channel grow, and it ensures you don't miss what could be one of the most important wealth protection cycles of our lifetime. Now, let's slow down and really understand what's happening. When we say 10 green months for silver, we mean 10 consecutive monthly closes in positive territory. That kind of sustained momentum is extremely rare. Markets usually move in waves: up, down, consolidation, correction. But when something trends upward for nearly a year without a major breakdown, it signals structural demand, not speculation, not noise, real accumulation. At the same time, gold has just printed 7 consecutive record highs. Historically, gold tends to move first. It is the leader in times of uncertainty. Investors run to gold when they are worried about inflation, debt, currency weakness, or geopolitical instability. But silver is different. Silver is smaller, more volatile, and often lags behind gold before suddenly accelerating. When silver finally catches up, the move can be explosive. So the real question is simple. Why now? The answer is layered. First, inflation may not be collapsing the way headlines suggest. Even if official numbers cool, the cost of living remains elevated. Housing, insurance, energy, food, these pressures do not disappear overnight. Investors know that long-term inflation risk is still alive. Second, government debt levels are at historic highs. The United States continues to expand fiscal spending, and bond markets are starting to show stress. When debt rises and confidence in fiat currency weakens, hard assets like gold and silver become more attractive. There is also the central bank factor. Around the world, central banks have been accumulating gold at record levels. This is not retail buying. This is sovereign-level diversification away from the US dollar. When institutions with trillion-dollar balance sheets quietly increase gold reserves, it sends a message. They are preparing for a more uncertain monetary future. But here is where it gets interesting for silver investors. Silver is not just a monetary metal. It is also an industrial metal. It is critical for solar panels, electric vehicles, medical technology, and advanced electronics. As green energy investment grows, demand for silver grows with it. That creates a unique situation. You have monetary demand and industrial demand colliding at the same time. Historically, when gold reaches repeated record highs and silver begins to show sustained strength, the gold-to-silver ratio starts to compress. That means silver often outperforms gold in percentage terms, and because silver's market is smaller, it takes less capital to move the price dramatically. If you look back to the late 1970s, gold surged first. Silver followed and then exploded higher in a short window. In 2010 and 2011, gold hit new highs, and silver eventually surged to levels few expected. I'm not saying history will repeat exactly the same way. Markets never move in identical patterns, but they do rhyme. And right now, the rhyme is getting louder. Another factor many people overlook is investor psychology. For years, precious metals were ignored. Tech stocks dominated headlines. Crypto took the spotlight. AI and mega-cap growth stocks pulled in most of the attention. But markets move in cycles. When valuations in one sector stretch too far, capital rotates. Smart money does not chase hype forever. It looks for undervalued assets with asymmetric upside. Silver, for a long time, was considered boring, but boring assets often become powerful during uncertain times. When confidence in growth slows or volatility increases, defensive positioning rises. And silver sits in a unique middle ground. It benefits from fear like gold, but it also benefits from economic activity through industrial demand. Let's also talk about momentum. 10 green months create technical strength. Chart traders watch these patterns closely. Breakouts above multi-year resistance levels attract algorithmic buying. Funds that follow trend signals begin to allocate. Once a breakout is confirmed, sidelined capital starts to enter. That can create a feedback loop. Price rises, momentum strengthens, more buyers step in. However, this is not about panic buying. It is about strategic positioning. Long-term investors understand that wealth protection is not built overnight. It is built through diversification, patience, and discipline. Gold and silver are not get-rich-quick assets. They are insurance against systemic risk. At Safe Haven Wealth, we focus on long-term protection, not daily hype. The reason this moment matters is because it combines fundamentals, technical strength, and macro uncertainty all at once. That alignment does not happen often. Now imagine this scenario. If gold continues setting records and breaks into a strong price discovery phase, institutional money could accelerate. If silver continues its steady climb and breaks through major psychological levels, retail interest could surge. Media coverage would increase. Search volume would spike. That attention alone can fuel additional demand. But let me be clear, volatility will still happen. Silver is known for sharp pullbacks. Corrections are normal. In fact, healthy pullbacks often strengthen long-term trends. The key is perspective. Are you trading headlines, or are you building resilience? Right now, many Americans are quietly questioning the stability of traditional portfolios. Stock market concentration risk is high. Real estate affordability is stretched. Bond yields fluctuate unpredictably. In that environment, tangible assets feel different. They feel grounded. And that brings us back to the original statement. 10 green months for silver, 7 straight records for gold. This has never happened before, not in this combination, not with this macro backdrop, not with this level of global debt and monetary experimentation. So what could happen next? There are a few paths. 1. Metals consolidate and build a base before another leg higher. 2. We see a strong breakout phase that accelerates quickly. 3. Short-term volatility shakes out weak hands before the longer trend resumes. No one can predict exact timing, but the structural forces driving this move are not short-term headlines. They are long-term shifts. If you've stayed with me this far, you already understand something important. This is bigger than a price target. It's about preparation. It's about asking whether your portfolio is balanced for uncertainty. It's about recognizing historical signals when they appear. As we move forward, keep watching how silver behaves around key resistance levels. Watch how gold responds to economic data and Federal Reserve commentary. Watch central bank accumulation reports. These clues matter. And now, I want to hear from you. Do you believe silver is entering a historic breakout phase, or do you think this rally will cool off? Share your thoughts in the comments. Your perspective helps build a smarter community here at Safe Haven Wealth. If you found value in this calm, clear breakdown, consider sharing this video with someone who is thinking about wealth protection. Conversations create awareness. Awareness creates preparation. We are living through a rare alignment in the precious metals market. Whether it becomes a full historic surge or a powerful consolidation phase, one thing is certain: this moment deserves attention. Stay informed, stay prepared, and as always, focus on protecting what you've worked so hard to build.